Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, February 17th, 2011. Well, folks, the markets are trading higher today, not by much, but the big story of the day is the reversal. Again, we saw it. The markets gapped lower and made a move dramatically higher, heading for the double top 52-week highs from yesterday. We took those out. We've consolidated above and now are breaking higher. Now, again, the spiders are only up 30 cents on the day. That, again, is a mirror of the S&P 500. The Dow is up 9 points. NASDAQ is up 6, and the S&P 500 is up 2.5 itself. But, again, the key has to be the noting of the gap down and the reversal. This has been a common theme as I zoom in on the charts to see a gap down. I think probably of the last 10 to 15 trading days, probably about 80% to 90% have seen a gap lower. And then again, the light volume, the Federal Reserve POMO kicks in. And again, the optimism in the market as buy the dip continues to hold true. So again, we've been talking about that to our nightly subscribers, how that's the common theme until some drastic event happens globally to shake things up and cause more volume. Volume is extremely light. We've done 58.4 million today. And again, please note the gap down. The gap down was very, very important because you gapped below the 50 moving average right here on the open, but notice the blue trend line. If you go back, take the closing pivot from the 14th, which was Monday, draw that line across, you can see we opened above that on the 16th, and then today we opened right on that level today on the 17th, and that again is the low of the day pivot. Since that point, you basically had nonstop green candles hovering right along the 50 moving average. Again, one small red candle in there, then a pop up. Then we consolidated along the 20, popped up again, went to a double top. And then again, once we were above the double top, you've just gone sideways until this most recent pop. All right, so again, it's just a common theme, folks. Same old, rinse and repeat, as I always say to our members in the Intraday Stock Chat and the Research Center. And again, I encourage you to join those, take the free trial, get as much as you can out for free, and again, decide if it's for you in terms of taking it as a service on a monthly basis for $49.99 per month for the Research Center. All right, again, as the market pops up here, we do have another target level at 134.50 on the SPY. Again, that could be and most likely where we're headed. It's a daily resistance level, and I do believe that will be a very, very key level. All right, let's take a look. What's the dollar doing today? And again, you guys should be able to guess. If we're saying the markets are slightly positive, chances are the dollar is slightly negative, and that is absolutely correct. Here's where the dollar closed yesterday, right there, and look at where it's currently trading. So again, lower dollar, what does that mean? Chances are it means a higher market. So again, inverse continues to hold. Now, yesterday we saw a couple instances where that didn't hold, and it made us think and surmise a possibility that there's a break from that. But today, it's going right back to being that way. So you don't have a full breakaway yet. There are instances when things start to panic a little where you do see a drop in the dollar and the market falling. But as long as things are quiet like they are today, it seems like we're holding pat on that. All right, and again, the other couple things to note here, tomorrow is Friday. The Friday effect will most likely be in play, which is neutral to upside. And then again, this weekend is a holiday weekend with Monday, the markets being closed, again, for President's Day. So chances are tomorrow, assuming nothing happens globally, should be a very quiet day. And then again, markets will be closed next Monday. All right, let's go into a couple other things. What's the GLD doing? Let's take a look at the GLD. GLD continues to slowly hover up a little bit, which makes sense. Dollar weaker, gold higher. That again holds true. Take a look at the USO today. The USO is getting a nice bounce today as well on the weaker dollar, trading up about 35 cents. Neither gold nor oil up dramatically, but again, just up slightly. You have optimism out there. There was pretty positive economic numbers today, very, very positive economic numbers out, and again, that's helping the markets as well. Taking a look back at the spiders, let's punch that up on the intraday. You can still see a very, very nice pop. Please note the consolidation above the pivot double top right here at the previous 52-week high yesterday of 134.01. Notice how the market got above, and this consolidation never was able to close below. You pierced it once, they never closed it below. That's a bullish signal. That's bullish consolidation right along that level. Look at how it pops. Now, if you had closed below the white line, I would say, okay, now look for a pullback because it didn't. Look for a pop, and you're getting that pop as we speak. All right, so again, very interesting chart there on the spiders. Let's take a look at a couple other key movers today. Number one, Apple Computer is getting hit today a little bit to the downside, only down a little over 1%, 1.33% today, down about $4.80. But this stock, again, there's been a lot of rumors, a lot of supposed sightings of Steve Jobs at certain clinics, and does he have cancer again? That's the thought process here, and that's why the stock seems to be under pressure today. Now, again, usually we're seeing this be not necessarily something that's validated by the news, by the legit news sources, but we always want to keep an eye on it. Apple's stock, if you go to the daily chart here, is very, very high. If I zoom out on the Apple chart, you can see the type of run it's had over the last couple years. So again, if that does turn out to be something that is true, you could see Apple tumble a little bit. I don't think a major drop, but a little bit more. And again, if it turns out to be fake, then again, look for the Apple stock to move back up, back to the highs from yesterday around 365. All right, but again, stock is trading decently down today, down about $4.75. Amazon, which was weak yesterday on a good push in the market, is trading up today. Take a look at that. Very nice move. It opened lower, but then quickly has moved to the upside. If you go to your daily chart here on this stock, you can see it had that nice little reversal over the last few days at the double top for a pullback. Now it's starting to retrace back to that level. As long as the markets remain firm to positive, you have to think that that's going towards the even number of 200. If the markets start to blip, I think this would be one of the big stocks that would fall very, very quickly because the earnings from last quarter were very, very poor. As long as the markets are in this kind of euphoric state, head in the clouds, then again, ignore the earnings, just go with the flow of the market, neutral upside. But again, if the markets do start to run into some troubles and you see some, drops day after day, down 1-2% in the markets, this stock, in my opinion, will dump very, very quickly because people will start realizing about the earnings from last quarter, which, again, the stock got crushed on when it came out right here. All right, let's take a look at a couple other things. What else is moving? IBM is a key catalyst of the Dow today. Notice IBM slowly faded into the 20 moving average, now getting a nice little pop on the daily chart. That stock is up $1.13. Again, a key component of the Dow Jones Industrial Average. ExxonMobil is down slightly today. That stock is finally running into a little bit of a headwind up here. You can see that big pop, then the big reversal day, and now actually making a bear flag on the daily chart. So that actually could head lower. Again, that's assuming the markets don't continue to rip higher day in, day out. While Chevron, its kind of sister company, sympathy type play here, is doing decently today, up 29 cents. But that stock also ran into a little bit of resistance up in this range as well. Microsoft, my partner, chief market strategist Nick Santiago, called this out to the chat room yesterday. A below 27 as a buy. It's had a beautiful reversal back above 27 today. Nice little bottoming tail in the short run as well. That stock, again, could trade all the way up to this necktie area, these two moving averages, which would bring us to about near $28. So again, very good call from there. And again, that's a chat room call. There's been plenty of calls in the research center, folks, for you guys out there. JP Morgan was the best one yesterday. Again, this was given out in the research center as well as the chat. Double top high from 2010 for a short. It was a scalp trade in the chat and a swing trade for the research center. And again, that stock, even with the markets positive, is down. Why? Because the charts tell you the facts. The hype on Wall Street, ignore it. Go by the charts. You will make money that way. And again, we will teach you how to make money that way. It's not very hard. Honestly, even a caveman, as the commercial says, can do it, in my opinion. All right, so again, good little call on JP Morgan. That's a Research Center call. If you join the Research Center, by the way, you get everything listed underneath the Research Center, including the nightly videos, hot charts and alerts, Pro Trader watches, technical tactics, daily market reports, and so on. Hidden gems, of course. All right, again, the hidden gem beginning to roar here, in my opinion, as it's beginning to inch up. Looks like it's starting to get some good pressure, so get on board, get that hidden gem ASAP by joining the Research Center. And again, you can take that free trial. That's what it's there for, to test us out. Okay, now a couple other stocks just to take a quick look at. Research in Motion having a good day today. RIMM trading up nicely, up about $1.58. That's the daily chart. If we flip to the intraday chart, you can see it had a good first candle, then just floating neutral to higher the rest of the day. Again, my prognosis for this market so far continues to be straight on, which is neutral to upside bias. Neutral to upside, guys. At the volume's light, the POMO continues, which is Federal Reserve buying treasuries, giving money to the banks. The banks then put that money into the market. Therefore, that continues buying. Retail investors are continuing to put money in. January, they put the most money in since 2004, so you're getting the little amateur to put their hard-earned money, their 401ks in the market. Overall, that could be something that's bearish in the long term, but bullish right now for the markets. And again, as long as things remain quiet in the Middle East with no major eruptions, and I know there is stuff going on there, but it's not enough to really dispute the markets or disrupt the markets. And as long as that's the case, you have to continue to believe they can float this market up in the short term here. All right, guys, enough said. Join the Research Center. Join the chat room. I will talk to you guys later tonight if you're in the Research Center. Otherwise, tomorrow. Take care.